You know that feeling, right? You're staring at a trading chart and it's just a total mess. You've got candlesticks, indicators, lines, all screaming different things at you. It is pure information overload. But what if I told you there's a really clear, methodical way to cut right through all that noise? Okay, let's dive in and see if we can find the real signal in all that static.
So take a quick look at this. At first glance, it's pretty confusing, isn't it? Is the market going up? Is it going down? Or is it just going nowhere fast? This exact problem is what we are going to solve in the next few minutes. So this right here is a 30-minute chart for QQQ. Now normally you'd be trying to figure out what all these different lines and squiggles mean, but instead we're going to focus on just one thing from a special indicator. It's called the pivot value. Just think of it as a probability score, a score for a trend reversal. And we're going to look at this same score across 5 different time frames, from a tiny 1-minute chart all the way up to a daily.
Our goal here is super simple, to give you a straightforward process, a method you can use again and again to take 5 charts that seem to totally contradict each other and turn them into one single coherent analysis.
So, I want you to think of this as a mission. We are intelligence analysts, and our job is to create one single actionable trend report from this mountain of raw data. And we're going to do it together, step by step.
First things first. Before we can analyze anything, we need to gather our evidence. We're just going to go through each chart and pull out one crucial piece of information. No interpreting, not yet. This is just pure data collection.
All right, let's start gathering our intel. We'll begin with the shortest time frame, the 1-minute chart. Okay, so the indicator is showing us a pivot value of 2%. Now that low number, plus the fact that the box is red, signals a really high probability that the current downtrend is in control. Let's log that piece of data.
Now, let's move up to the 5-minute chart. The pivot value here is 4%. So it's still a pretty low number, and the box is still red, which just reinforces that same signal. The short-term trend is clearly down. Got it?
Okay, hang on, because this is where the story changes. On the 30-minute chart, the pivot value jumps all the way to 56%, and notice, the box is now green. Now that is a much stronger signal. It suggests that on this medium time frame, the probability is leaning heavily towards an uptrend. This is our first real clue that something bigger is going on. Next up, the 2-hour chart. Okay, so the pivot value is back down to 3%. But, and this is important, notice the box is still green. This tells us the uptrend is still the dominant force on this time frame, even if this one particular bar isn't a strong reversal point. See, we're building a picture here.
And finally, our widest view, the daily chart. And look at that. The pivot value is back at a powerful 56%, and the box is green. This completes our data extraction, and it gives us a very strong signal for the long-term trend. So here's everything we collected, all laid out in one place. It's like our evidence board in a detective movie. We can clearly see the short-term story, told by the 1 and 5-minute charts, is red. But the longer-term story, from 30 minutes all the way up, is green. Now the real analysis can begin.
So what do these colors actually mean for our mission? Well, step 2 is all about translation. We're going to convert this simple color-coded data into a clear market trend direction.
And the rulebook for this could not be simpler. Seriously, if the data box we looked at was red, it means a downtrend. If the box was green, it means an uptrend. That's it. That is our secret decoder ring for these charts.
This is where the magic happens. We're now going to take our translated trends and compare what the short-term charts are telling us versus what the long-term charts are saying. This is where the story really unfolds.
So the whole point comes down to this right here. On the left, our 5-minute chart is red, and it's basically screaming short-term downtrend. But on the right, the daily chart is green, indicating a powerful long-term uptrend. They're telling us 2 completely different stories. So, what's the real conclusion?
It is time to synthesize everything we found, the raw data, the translated trends, and that conflict between the timeframes into a single, coherent market report.
So, here it is. The short-term picture on the 1 and 5-minute charts, a clear downtrend, no doubt about it. But the dominant, long-term view, from 30 minutes all the way up to the daily, shows a clear uptrend. And the key insight this gives us, the really interesting part, is that this conflict suggests the larger uptrend is just pulling back and is likely approaching a bottom.
And this quote just illustrates the situation brilliantly. Think of it this way. The long-term trend is the entire ocean tide, slowly rising and coming into shore. That short-term downtrend we're seeing,
That's just a single wave pulling back out to sea before the next big surge forward pushes the tide even higher. Now, the tool we use for all of this is called the Unentangle Indicator on TradingView. It's built on something called Chan theory, which is just a way of looking at market movements not as random noise, but as these overlapping trends of different sizes. It then uses some pretty cool statistics to tell you the probability that any one of those trends is about to hit a peak or a bottom. And hey, if you want to try this for yourself, it's really straightforward. Just open up the supercharts on TradingView, head over to the Indicators panel, search for Unentangle, and just add it to your chart. You can run this exact same process on any stock or index you're following.
So that really brings us to our final thought. We just turned 5 chaotic charts into one single clear insight. And it kind of begs the question, doesn't it? How would your decisions change if you could actually see the probability behind every single market trend?